The number of Bitcoin there will ever be in the world is 21 million. And right now, we're at 19.5 million outstanding. And it's only going to 21 million. If you look at that 19.5 million, and you can see this network's completely transparent, 15 million of that 19 million are in what we call strong hands. They have not moved their Bitcoin in more than 155 days. That means they're hodlers. So think about that, 15 out of 19.5 hodling, right? 1.5 million left.
Yes.
Institutions have just gotten involved. The SEC gave it the green light in the form of an ETF, and we were one of the 11 launched. We're doing very well, thanks be to God. Think about that. What does that mean? If institutions really want to be involved, they will have to pull with pricing the hodlers into selling their Bitcoin.
As of March 2024, the Bitcoin supply stands at 19.5 million BTC, with only 1.5 million left to mine before reaching its cap supply of 21 million. This scarcity factor is a fundamental aspect that underpins Bitcoin's value proposition, akin to digital gold. The upcoming Bitcoin halving event in 2024, which will reduce the block reward to 3.125 BTC, is anticipated to have a significant impact on the supply dynamics, potentially driving prices higher due to increased scarcity. Mining Bitcoin has become an energy-intensive process requiring powerful hardware and substantial electricity, making it increasingly challenging for individual miners to compete with large-scale operations. Despite these challenges, the decentralized nature of Bitcoin ensures that it remains out of the control of any single entity, preserving its foundational ethos.
In 2015, we wrote our first blog the first year we opened ARC in 2014. 2015, Bitcoin was $250, right? And we wrote a paper about, and it was in collaboration with Art Laffer, about Bitcoin. Could this really serve the three roles of money? And with Art Laffer, we answered yes. And once we got that seal of approval from an economist who's a monetary scholar, we said, okay, we have to do something with this. We have to run hard with this. And we've been running ever since. But it's gone from $250 to $43,000. And we still think it's just begun because institutions are just now becoming involved. So it's pretty exciting. We think it could scale. Depends on we have a base case, a bear case, a bull case, but it could scale from 43,000 to 650,000 or $1.5 million per coin, or even higher as institutions get in. But the most important thing is we talk about these themes is be prepared for huge volatility. There's the hypes, and so there are the booms and the busts and the booms and the busts. The trend line should be up, but you have to prepare, especially young people, for volatility.
So you pretty much coined the phrase disruptive innovation.
Yes.
So can you describe that in a definition and why you believe in that so much? That's kind of, your go-to. If you're going to be MJ, it's like the fadeaway to you.
I don't think we coined the expression, but we are activating it. So the seeds for everything that is happening today were planted in the 20 years that ended in the tech and telecom bubble, right? And then there was the crash. So all the seeds were planted there. But the reason the crash happened is because the technologies were not ready. And even if they were kind of getting ready, the costs were prohibitive. So just to give you a good example of the second one, in 2003, but we were thinking about it in the late 90s, in 2003, the first whole genome was sequenced. We were able to understand all of the 6 billion bits of code in one person's body. And so that we could understand what was going wrong. That cost $2.7 billion just for one person. and it took 13 years of computing power. We were not ready for prime time, but biotech was a big part of that bubble, right? The technologies weren't ready. We didn't get the cloud until 2006. We didn't have the two very big breakthroughs in AI, deep learning in 2012, and then transformer architecture in 2017-18. Those technologies were not ready for prime time back then, but capital flowed aggressively into them and shouldn't have. Today they are ready for prime time. We are starting to scale the 5 major platforms, which are robotics, energy storage, artificial intelligence, blockchain technology, and multiomic sequencing in the life sciences space. And I know, so we believe they're scaling now, but and this is perfect investor psychology, and I'm very comfortable. People are scared. I'm comfortable as a portfolio manager because I would prefer to be investing in something controversial when there's a lot of FUD out there, fear, uncertainty, and doubt. And that's because there's people fearing for their jobs, their businesses, meaning in the financial industry, and they don't want to be wrong. Well, guess what? If you don't take risks, you're not going to get returns. But you have to manage. You have to manage those risks and manage around the volatility. Use it to your benefit.
Bitcoin's journey from a value of $250 in 2015 to its current state highlights its vast growth potential. Institutional involvement is beginning to take shape, suggesting a burgeoning acceptance of Bitcoin as a legitimate asset class. The next halving event in 2024 is expected to further constrict the new supply of Bitcoin, making it even more scarce. This scarcity, coupled with increasing demand from institutions and retail investors alike, could propel Bitcoin to new heights. The principle of disruptive innovation, as discussed by Cathie Wood, underscores the transformative potential of technologies like Bitcoin. As these technologies become more integrated into our financial and societal frameworks, the potential for growth is immense. Yet this path is accompanied by inherent volatility and risks, which investors must navigate carefully.
Disruptive innovation is going to transform the world as we know it today completely in the next 5 to 10 years. I think most investors are not equipped to do what you're doing, number one. And one of the reasons is because after the tech and telecom bust, that was in the early 2000s, and then even more so after the global financial crisis in 08, 09, they became scared. I'm going back to that. And they began to think, okay, I have to invest in the public markets. I have to invest close to the S&P 500 or close to the NASDAQ or close to the MSCI World. And so their reaction time, that skill set that I learned when there were no computers and no cell phones and no spreadsheets unless we did them by hand, the reaction time that I have to information, which is constant, it's constantly bombarding us, right? You know, you take all of that information in and you need to make decisions quickly. The traditional world is losing that talent because it's letting an index lead the way. Indexes are all about what has already happened. The stocks at the top of those indexes are there because of their past success. But if we're right on disruptive innovation, that, again, is going to turn sectors upside down, inside out, people aren't going to recognize them in 5 to 10 years, that is exactly the wrong way to invest. So taking information in real time, constantly, every day. If you're in the crypto world, or we'll call it more the digital asset world, it's 24/7 now. So, right, it's not just 9:30 to 4 like the equity markets open. It's 24/7. So now that world is on steroids in terms of this reaction time. If you look at disruptive innovation in the global markets today, they're valued at roughly $19 trillion. This is public and private. And that's almost 15% of the total, right? We think that 19 trillion is going to scale to 220 trillion, right? So tenfold in the next 7 years. That's how quickly we believe the world is going to change and how if people get on the right side of change, you can harness these technologies and really create a better life for yourself, your families, and create better communities.
The intersection of disruptive innovation and cryptocurrency presents unprecedented opportunities for transformation across various sectors. The fixed and predictable supply of Bitcoin, contrasted with the unpredictable nature of traditional fiat currencies, positions Bitcoin as a hedge against inflation and a potential catalyst for new economic paradigms. As we look towards the future, the role of Bitcoin and other cryptocurrencies in reshaping the landscape of finance and beyond becomes increasingly evident. With only a fraction of Bitcoin left to mine and its entry into mainstream financial systems, the next decade promises to be a pivotal period for Bitcoin and disruptive technologies at large. By embracing these changes and understanding the underpinnings of digital assets like Bitcoin, investors and enthusiasts alike can position themselves to benefit from the wave of innovation set to redefine our world. Remember, the journey through the landscape of Bitcoin and disruptive innovation is fraught with challenges, but also ripe with opportunities. Subscribe and like our videos to stay ahead in the ever-evolving world of cryptocurrencies.